Hey everyone, welcome back. And if you're new here, I'm really happy you found this video. If you've ever felt confused about investing, or you've been putting it off because it just feels intimidating, trust me, you're not behind. Most people never grew up learning this stuff. What matters is that you're here now and you're ready to learn how to make your money work for you. And that's exactly what we're going to do today. Today, we're talking about how to start investing in Canada, even if you're starting with a really small amount. And when I say $100, it's not a magic number. You can start with 50, 20, even 10. Starting small is totally okay. The important part is learning how this works and building the habit. Before we get into anything specific, let's start with the simplest question. What is investing? There are basically two ways to make money in life. You work for your money, and your money works for you. Investing is how you make number two happen. It's when you take your money and put it somewhere, it has a chance to grow on its own, even while you're sleeping, working, or going through your day. That's all investing is. It's not a secret club. It's not something only wealthy people can do. It's just giving your money a job. And there are many different things you can invest in. There's real estate, there's gold, there are bonds, there are businesses. There's REITs, which stands for Real Estate Investment Trusts, meaning you can invest in real estate without buying a property. There's crypto, and of course there's the stock market. But today's video isn't a deep dive into every type of investment. Today we're focusing on the beginner-friendly stuff so that everything else becomes easier to understand later. Think of this video like Investing 101 for real people. Now before we talk about what to buy, we need to talk about where your investments should go. Because in Canada, the type of account you use makes a huge difference. So let's start with the two big ones. The TFSA, what it actually is. TFSA stands for Tax-Free Savings Account, and I wish it was named something else because the name confuses people. A TFSA is not just a savings account. It's actually a powerful investing account where all your growth is completely tax-free. If your investments inside a TFSA grow from $100 to $200,000 over your lifetime, you get to keep all of it, no tax on the gains, ever. This is why the TFSA is usually the best account for beginners. It's flexible, it's simple, and it lets you grow your money without the government taking a cut. And because there's a lot more to explain about TFSAs, contribution limits, strategies, mistakes to avoid, I'll make a full TFSA video soon. The RRSP, how it works. The second major account in Canada is the RRSP, which stands for Registered Retirement Savings Plan. This one is designed for retirement, and the big benefit is the tax deduction. When you put money into your RRSP, you lower your taxable income. That means you pay less tax right now. Your investments then grow tax deferred, meaning you don't pay tax on the growth until you take the money out later in life. RRSPs are amazing if you're earning a higher income, or if you want to save for retirement in a tax-efficient way. But they also have rules about withdrawals, so they're not as flexible as a TFSA. And yes, just like the TFSA, the RRSP deserves its own full video, which I'll also be making. For today, just know this. If you're brand new, a TFSA is usually the simplest and most beginner-friendly place to start investing. All right, now that you understand where your money should go, let's talk about what you're actually buying. This is the part that confuses almost everyone in the beginning. You open an investing app and suddenly you see hundreds of symbols and charts and numbers and you're like, what is all of this? Let's break it down in plain English. Stocks, bonds, and ETFs explain like we're friends. When you invest in the stock market, there are three main types of things people buy: stocks, bonds, and ETFs. But don't worry, these words sound harder than they really are. A stock is just a tiny piece of a company. If you buy one share of TD Bank, you own a tiny part of TD. If the company grows and becomes more valuable, your piece grows too. A bond is basically you lending money, usually to a government or a company, and they pay you back with interest. It's slower, steadier, and lower risk. And then there are ETFs, which stands for Exchange Traded Funds. ETFs are the easiest place for beginners to start because they make everything simpler. Here's the clearest way to imagine it. A stock is like buying one single apple. An ETF is like buying a fruit basket with apples, oranges, bananas, berries, everything mixed together. When you buy an ETF, you're buying a basket of many companies at once. If you invest $100 into an ETF, your money gets spread across all the companies inside that basket, automatically. You get instant diversification. You don't have to guess which company is going to be the next Tesla. You're investing in a whole group of companies at once. That's why ETFs are perfect for beginners. They're simple, diversified, and low maintenance. Now let's talk about ETFs Canadians actually buy and why. One of the most popular types is the S&P 500 ETF. The S&P 500 is basically the 500 biggest companies in the United States. Companies like Apple, Microsoft, Amazon, Google, Tesla, and so on. If you invest in an ETF like VFV or ZSP, you're investing in that whole group. And here's where it gets interesting. Let's say you invested $100 into an S&P 500 ETF 10 years ago. Over the past decade, the S&P 500 delivered roughly a 240% total return. That means your $100 could have grown to around $340. Pretty good, right? Now compare that to a regular savings account in Canada. Most savings accounts pay between 0.5% and maybe 2% interest. So after 10 years, that same $100 might grow to about $105, maybe $110. So S&P 500 ETF, around $340. Savings account, around $105. And real estate? Yes, real estate can grow too, but you can't buy real estate with $100. You can't even buy it with $500. You usually need thousands and sometimes tens of thousands just to get started, but with a simple ETF, your $100 can give you exposure to hundreds of companies immediately. This is why the stock market, especially through ETFs, is the easiest way for regular people to start building wealth. Another type of ETF Canadians use is a global ETF, something that spreads your money across companies all around the world. Things like XAW, VEQT, or XEQT. These give you exposure to the US, Europe, Japan, emerging markets, basically the whole world in one investment. They're simple, balanced, and great for long-term growth. Then we have Canadian ETFs like VCN and XIC, which focus on Canadian companies, banks, pipelines, telecoms, energy, stable, reliable businesses that help diversify your portfolio. You don't need all of these, you just choose what fits your goals. And we'll do breakdown videos on each category later, so you'll understand them clearly. Now let's talk about the thing that matters most: consistency. Your first $100 is great, but what truly builds wealth is the $20 or $50 you add every month afterward. Consistent investing, even in small amounts, beats trying to time the market or guessing the next hot stock every time. This is why automation helps so much. You can set your TFSA to automatically deposit money every week or every month. You can set your investments to automatically buy a little bit of your chosen ETF. This is called dollar cost averaging, but you don't need to remember that term. It just means invest a little at a time consistently without overthinking it. That's what builds real wealth. And one final piece of advice, try not to check your investments every day. The stock market moves constantly. It goes up, down, sideways, and a lot of that movement is just noise. If you stare at it every day, you'll stress yourself out for no reason. Instead, zoom out. Think long term. Adjust only when your goals change. Here's the truth. You don't start investing because you're rich. You start so that one day you can feel financially secure and in control. Your future self, the version of you who feels calm and confident about money, that version starts with the decision you make today. Open a TFSA, deposit what you can, pick a simple ETF, automate it, give it time. That's how you build real wealth. Thank you so much for watching. If this helped you, hit like, subscribe, and let me know in the comments. Are you starting your investing journey today? I'd love to hear your story. I'll see you in the next video.